Welcome to an episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Quinn McArthur, a West Point graduate and former Green Beret. After working for one of the nation's largest private commercial real estate developers, he launched Apex Capital, a real estate private equity firm. Following that, he co-founded Legacy Land Fund, focusing on passive income generation through land note investing. So thank you so much for coming on the show today, Quinn.
Absolutely. Thanks for having me, Charles. Good morning.
Good morning. Yeah, give us a little background on yourself, both personally and professionally, prior to getting the real estate bug and getting involved with investing.
Sure, man. I was an Army officer for 10 years, so no background in real estate, although I had some family in it. So spent 10 years in active duty as an officer, and then really the tempo was so high between deployments and training cycle, and I wanted to move on with my growing young family. And so real estate was a natural choice for me to kind of continue to have impact.
When you got started, what brought you to real estate investing? Because there's so many different, pursuits in and outside of real estate. What was that brought you into what you're doing now? Was it somebody that you knew that was successful in real estate before and you want to kind of mimic them, or you just felt it would be a great way of kind of having a little bit more freedom over your time?
Yeah, I mean, the natural progression for, I guess, folks that were kind of on my path, they would get out and they go back, get their MBA, go into investment banking, go into consulting. And for me, those routes were just um, untenable for our family. It was just going to be more of the same, just spending a ton of time, a lot of travel. Real estate, on the other hand, was man, I had friends that were doing it. Their lifestyle was family focused. They were passive. I mentioned impact. They were actually having true direct impact on their communities, not only in the specific project they were working on, but the surrounding communities. And to me, that was neat. I mean, the tangibility of it was what drew me in. And so luckily I had a mentor in the panhandle of Florida where I lived at the time that taught me his ways, specifically in land investing.
Oh, very cool. Yeah, it's real estate's one of those things where you don't really think about. We don't talk too much about it on the show, but if you haven't been to an area in maybe a couple of years or whatever, and you drive through it, and there's been a lot of work done, a lot of renovation. You can see how it's really changed the neighborhood, and you might not see it day by day, but if you come back and you see something, the amount of impact that one property, then another property can do on just a neighborhood, and it's super local, and that kind of like spreads little by little because now it's a magnet for more capital coming in. So it's pretty powerful.
Yeah, that's right. And the company I was working for, well, the companies I worked for were they had changed. I mean, almost single-handedly with just a small team had really changed the dynamic of the town and the city that they were in. And I'm like, I show up there to help them out, and I'm like, who else is involved? They're like, it's just us, and that was incredible to me that just a few folks can see a vision, put it into action, execute, work hard, and yeah, take feedback from neighbors, take feedback from the city or the county or the municipality, and move forward with like quality developments that truly help people.
Yeah, and the city see that, and the people see that. My dad was he started off as like a D class apartment owner. We're originally from in Connecticut, and the police officers would like stop by his property and like commend him and thank him. And like city, like people like knew him and knew what he was doing. And obviously, you make a little bit of an impact. He did, you know what I mean, where it was surrounded by like slumlords. But people see that are in the city, that are in the community, and they really appreciate it. You're doing your best to really trying to provide housing, and then also to do your little bit to try to clean up that neighborhood.
Yeah, it doesn't take much to stand out. You ask a few folks for like their opinion and their suggestions, and you actually implement, be it the city or neighbors, neighbor property owners, business owners, chamber of commerce, folks. That goes a long, long way.
So, kind of, what was your first investment? How did you get started? What was kind of your first foray into real estate investing?
It was the gentleman that I mentioned. He was a mentor of mine. I kind of sought him out because I saw what he was doing in land. I knew nothing about real estate. I mentioned I had some family doing it, but they weren't doing land. And this guy was he was just very he was investing in the Panhandle of Florida where he lived, but he was just very passive. I mean, he was always out on his boat or golfing or hanging out with his kids. And I'm like, how in the world are you doing this? And so he introduced me to the world of notes, mortgage note investing. Um, and kind of being just a basic army guy coming out. I mean, it was a steep learning curve for a few years, but I was able to kind of invest alongside with him. And so we did a few deals, kind of co-invested with him passively. And that's really, we sold a couple pieces of land and on seller financing and collected a note and collected the monthly payments. And that was really the turning point when I saw the power of like, wow, I didn't have to do that much. I mean, we took some risk, we took some time on the due diligence, but these notes cash flow and it's capital, it's all backed by land and it's capital preservation and it's predictable and and it's scalable and I was hooked from that time on.
Yeah, the proof of concept is definitely a huge point in kind of propelling anybody's career into whatever they're working in.
Yeah, and I'm probably not unlike most of your listeners or most people in general that you kind of have to do it yourself. You see it personally, you can read about it, learn about it, hear, listen to a podcast, but until you actually do it and it significantly impacts like the financial security of your family. Wow. Then it's like, oh shoot, this is real.
Yeah.
Then you have like true conviction of it, so you have to do it.
Yeah, it was on my second property. My first, like 3 family, it was kind of like a mess. The second one, I did a lot better, and I kind of had an idea of what I was doing, and I was like, "Oh yeah, this is how it's done." You know what I mean? And I was like so pumped after that getting doing that second one because you're like, "This is how income comes in. This is how everything gets done. Like this is the right way of running properties like this." So it's super powerful and getting really going for what you guys are doing now. So let's get into kind of what you're doing now. So give us an overview of your company. You have a couple of them, and really your investment strategy of what you've been working on lately.
Sure, man. Well, I keep it pretty simple. I have kind of two strategies. One is kind of growth mindset, and one is just stable cash flow mindset. So for growth, I invest in commercial real estate, and I'm pretty agnostic with the market and with the strategy. Um, or the asset class. I think Charles, you had a great post the other day about vetting deal sponsors and having that as your priority. And I couldn't agree more. And that's my aim with the growth strategy is to partner with experts in their field, in their niche. And so I'll help raise capital for select deals opportunistically as it comes up, generally like the Southeast, so it's multifamily, mobile home, self-storage, things like that, and other little niche projects here and there. And then the cash flow side, the stable, predictable side are the notes that I mentioned. And it's all land. It's vacant land. So talk about a niche. This is like a niche within a niche within a niche. And but it's worked really great. It built up our portfolio. It's what I've been doing to support my family now for a while, and it grew to the point where we wanted to invite other people's into that strategy. People that want real estate exposure but don't really want to take a ton of risk. There's never going to be a capital call. There's not crazy assumptions on exit cap rates and rent growth and expense, lowering expenses. It's all very simple and almost boring. And so those are my two strategies: growth side with commercial real estate selectively, and then the land stuff with, for predictable, boring.
What I found out is boring, simple investments are usually the best. And people don't kind of stray away from them because they don't think that's where the money's made, but actually that is where it is. So,
Yeah,
uh,
absolutely.
so we've spoken about a lot of people on the show about, commercial, multifamily, all this kind of stuff, but I really want to dig into what you've got going on with land investing and land note investing. So you went through a few things there. Why would be kind of a premier strategy over other real estate investments, but kind of what does a typical land funding deal look like when it comes to you?
Gosh, there's so many different strategies, even within land. You'd be surprised. I mean, I could talk for an hour on like the variety of strategies all within just land. But in, I guess, my strategy of choice is notes. And so typically we'll buy discounted notes. So if something's worth, $100,000, maybe the loan or the note, the face value is worth like 80, we might buy that for 60. So we'll buy it at a discount, and there's probably a 10% interest rate on that, 5 to 10 year term, and we collect monthly principal and interest payments. No different than the bank. I mean, it, that's probably the easiest way to explain what we do is we are the bank for landowners. No different than if you have a mortgage on your house, we are the mortgage, the note holder for landowners. And it can be recreational land, it can be farming, agricultural land, development, development opportunity land. People that are, land investors a lot of times where they're going to buy a big chunk and subdivide it. Well, they need help on financing too because it's so hard to find financing for vacant land. And we've grown comfortable with that as an asset class. We know what to do with it should things go wrong. Um, and hopefully that answers your question. I can go into detail.
Yeah, the so just to kind of clarify, as so I understand it, you're pretty much if so. For instance, if I get a mortgage on a house, the lender that I get the mortgage from, let's just say, who originate that, is probably not going to be my lender 6 months down the road. It's probably going to get packaged, it's going to get sold somewhere. So pretty much what you're doing is you're kind of like the secondary market. You're going to be buying these loans at a discount, right? So that you can kind of wait out and fulfill the full value as they pay you and pay down the mortgage. Um, how okay? So like the deal comes up
One
like now.
one
So, yeah,
sorry, one caveat to that. We're not really buying from banks though. I
right,
mean, they're not you're not going to get a great deal that way. A lot of our transactions are private, and sometimes we even originate the loan. We know that land investor from the outset of the deal. So when he sells it, we're able to kind of serve as the bank for the ultimate like land.
right. So whatever that initial lender is, I was just using the bank as an example, but like the initial lender, because you'll have this sometimes with private money lenders that might lend onto, I might sell say a seller finance apartment building I sold, and I said I was going to give it 8 years, and I had a life situation 2 years in, and I can sell that now. It's a private mortgage, but I can now sell that to someone else, and like it's similar to what always happens, as you would say, in residential with houses and stuff like this.
Yeah, it's an asset. You don't own the real estate. You own the paper, and it cash flows. There's no risk. If you have to take the property back, you can. So yes, you got it.
Okay. So how are you finding the deals? And then, how does that get all put together? How are you finding people that want to sell and kind of working out all the numbers within that?
Well, my partner and I, having been in the industry for quite some time now, it's really a kind of a close knit network of folks. So it's a lot of word of mouth. We know a lot of the big players in the across the country, and so a lot of our deal flow happens organically. Word of mouth. We might help one land investor, and then um, he shares what we're doing, our product and services, and he has a good experience with us, and so he'll share it with others. We don't do a ton of advertising. We don't do a ton of marketing. We don't need to. Maybe that's going to happen in the future, but right now we're very comfortable with the amount of deal flow that's happening just in our internal network, and we prefer that too because we know the folks. You know what I mean? We're on a first name basis. We're a text away from a lot of these guys, um, and that's kind of how we prefer it.
So for say for instance, if you're working with someone that sells the land on, they take a note, they sell to someone that's going to use it for recreation or whatever it is. And at that point, that's when they'll probably reach out to you and say, "Hey, I want to like turn this one into cash." And that's where you're coming in and buying it, and then you're going to hold that for whatever the term is. And what does that usually look like? That term on something like that, where someone finances out it. I imagine it doesn't go. It's 5 to 10.
5 to 10 years. A lot of people pay off early, which we make it easy. There's no like prepayment penalties or anything like that. We try to, we don't want to we don't want to be a bank, be like a bank in that way where it's so institutional, so like, we're just normal guys just trying to help people, with land ownership, developers, subdividers, investors. Um, so yeah, typically 5 to 10, but a lot of times people will want to get out of that early, which we're perfectly okay with because of the strong deal flow.
And how do you guys protect your downside on something like this? Obviously, it's backed by land. However, in I would imagine most situations, this land is not generating any income. It's for personal use. Is that correct? How does that kind of work into your strategy?
Well, that is number one. We're in a first lien position on the land, so if anything happens, that we own it. The second thing is our investment to value ratio is very low, 50 to 60%, and so like if we have to take it back, we're into it at like 50 or 60%. So we could fire sell that land. We could sell it again via cash or seller financing. It's no problem. Even if in a big downturn or recession, like and the market shifts and those values decrease, we're still okay. Our default rate is very low, less than 10%. And that's really because we do three main things. Number one is a very strong down payment, 20% minimum down payment. So most banks accept 10, 15. Some of them are 20, 25, but we're like 20 minimum. We'll do a credit check. We'll do a personal guarantee. And so like we're not going to go into a deal like, oh, this is a great deal. We just want to, we need the deal flow. It's not like that. It's like let's get quality paper, quality assets, quality borrower. And if they check all those blocks, then it's a deal. And the math is easy. I mean, it's again very little assumptions. It's what's the what's the term, what's the interest rate, and I mean there's four variables there. So we back into what we can afford for that deal, and we bring it into the fund.
Now, if you were lending on houses, I mean, there's so much information out there on due diligence on a property. If within anybody's fingertips, they can figure out some sort of what the value is of a property within something. And, you check, you're doing all the due diligence on the borrower. That's pretty straightforward. We're doing credit checks, background checks. They're putting down money, whatever else is required in there. That can be done pretty much anywhere. How are you doing the due diligence on the property and knowing that if you're lending X amount on the property, it's not half of X is the value? You know what I mean? Like that's just one thing for me that I wouldn't know how to value
And that's why most people don't get into
that.
it. And that's why this is such an interesting niche, because it is a bit of an art and a bit of a science. So of course you can hire an appraiser, you can hire, local land specialized agents, especially when it's like a big hunting track or something. You're going to call Whitetail Properties or Mossy Oak, and they're going to go out there with drones and figure it out. They're going to they're going to assess the land, they're going to assess the timber value and all the things, and they're going to send you a report with like, man, it's within this range. So if we take the lowest portion of that range, and if that works for us, then great. Of course, we'll do our own due diligence. We look at only sold comps within the past year, for similar properties, on a cost per acre basis. Um, we hire a lot of consultants. I mean, sometimes, especially on the bigger deals, like we're hiring soils consultants, we're hiring environmental guys. We're talking to the city and the county about future growth plans, the planning and zoning boards, about where growth is happening, and hey, there's a county road cutting through here. Like, what's the plan for that? And so we kind of piece all that together, and it's usually we blend all our feedback from all these sources, including our own, and so we come to like a range of values. Hey, this is worth 300 to 400. Okay, if it works at 300, it's a deal.
Interesting. Yeah, it's just because if I'm where I am in Florida, if I drive across the state, if I'm going to Tampa or St. Petersburg or something like this, and if you're on the weekends and you're driving through, you'll see RVs and you'll see them pulling or side by sides or ATVs, and you're like, and everything's covered in mud. So you're like, okay, these are like the people that are using the land, because you know what I mean? Like these are people that are going out to a track, they're staying there for the weekend, whatever it is, on their land, most likely, or someone else's land. And like, all right, these are like your prime investors that are utilizing this. And so that's really cool knowing that. But my thing is that obviously this was like, I would imagine this got a lot of steam during COVID and everything like that. Do you see people buying and financing land during, if we had a pullback or during maybe less certain times?
Yeah, so you identified a portion, a subset of our clients, and those are the recreational guys. And in a downturn, those type of folks might pull back a little bit. Like, hey, now's not the time to buy 70 acres in Oklahoma and ride four-wheelers, right? Like, well, I'll save that for next year. We'll see what happens. But the demand for land, you'd be surprised. The demand for land, yes, COVID really heightened it. But you have so many people that just the the connectivity, the remote work opportunities now are allowing people to get out of cities and even suburbs and go another, 20, 30 miles away. We have a big property outside of Nashville. It's an hour from Nashville, hour west of Nashville. And we're selling this land like crazy. Um, and there are a lot of them are like Nashville people, or if you're familiar with Franklin, they're getting out of like they need some elbow room, and they want 5 acres, they want 20 acres and 75 acres. They want some elbow room. They want to be in unrestricted areas, so they can hunt, they can hang out with their kids, and they don't have to see their neighbors. So there's a niche for it, and then of course there's the developers, like folks that want to buy 100 acres and they want to split it up into, you know, I don't know, acre to 2 acre tracts and build barn dominiums, build tiny homes, build RV parks, so that the uh, trailer storage. You know what I mean? The surface parking. I mean, there's so many exit opportunities. Um, but no, I don't see. I mean, honestly, sometimes even in a recession, it helps us a bit, um, because people kind of they're like, maybe now's the time to buy some land. Let's get out of Dodge. Maybe we have a lot of equity in our house. Let's go buy something like affordable, a little bit further out. I heard that they have good, seller financing available, and let's go enjoy our lives.
Yeah, that's very powerful. Definitely for Nashville, I can see that. I mean, it's just as I know investors there, they're just saying it's blowing up, and it's a so people trying to get a little bit more, like you said, elbow room, get out of the mix of it all, and get a little break from it. And I guess this is a lot less expensive of a way of doing it, especially if they're going to build on it or if they're putting their RV on it, whatever. Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. So with all your years of doing this in land, what are some of the common mistakes maybe you see some land investors or land note investors make? Maybe some of them you've made yourself, I imagine, in the beginning.
Yeah, I'd say generally they're just hungry to do a deal. They're too hungry, so they don't have enough deal flow, so they have to take bad deals, and that's scary. People get stuck with inventory. They get their, they hold on to, they're just, um, they don't spend the requisite time needed to really uncover the red flags. I mean, I don't know how many times we're like, hey, this looks like a deal. It looks like a deal. We get to the final, we're like, oh, we assumed the soils were going to be good. That's a big thing for us. If the soils are bad and it doesn't have a perk test, you can't put a home on it. You can't build a septic because we're usually out there. There's no like city sewer, right? So if it doesn't um, meet a percolation test through the city or a third party, it's junk. Like you don't want it unless it's big enough and it can be sold as a recreational property. But I don't know how many times, but people will forego that. Right? It costs you a couple $1,000s, an extra couple weeks. People are like, it's probably good. I see houses all around. It's probably okay. Well, they end up trying to sell it and they get stuck with it because it's not for whatever reason. There's rocks or I don't know, clay soil that's just, just bad soil. Um, so I'd say, yeah, to answer your question, people rush into deals that they shouldn't be getting into. And so I'm always of the mindset, like, even with commercial stuff, like you have to leverage other people's expertise. Like I'll never be as good as Charles at multifamily underwriting in Central Florida. You know what I mean? Like I'll partner with you, like you're the man, and likewise with other developers or self-storage guys, like you gotta and land, like if you're doing land and you want to be passive, like you have to partner with people that have been doing it a while because you will get there's some pitfalls.
Yeah, no, that's a lot of great information there. The due diligence and I mean any portion of real estate investing that you get involved with, every time if I speak to someone that's seasoned, it's the lack of due diligence is where you get caught. And I've done it myself. I mean, you know what I mean? Stuff where you just kind of pass on it. And now it's like, okay, this is the reason why we have like a really strong reserve fund. And this is why we bring in like a lot of professionals to do inspections, not just the property inspector says it's going to be fine. It's not. No, you're going to bring in that HVAC guy. You're going to bring in that roofer. You're going to walk the roofs. You're going to make sure that everything is what it seems. And if not, then we can work something out with the seller or, really make sure that we, know that we have this repair coming up that we have to prepare for.
That's right.
So over the years with everything you've been involved with, what are some of the main factors contributing to your success?
I'd say it's partnering with good people because I know what I know and I know what I don't know. So filling the gaps in the things that I don't know and leveraging other people's expertise and time and capital. Excuse me. I would say, for me, momentum's a big thing. Like when you get a like I think people when they get a win in a property or an investment or in their day job, they get a win, they get a bonus or a financial moment. Um, you have to leverage that. You have to keep pushing and keep taking risk. And so pivoting from one success to the next and keep leveling up and keep, do bigger, do more, scale up, higher, and use momentum. A lot of people, I think, when they get a win, they'll kind of sit back. They're kind of like maybe subconsciously they're kind of like, okay, I'm good. But now that's to me that's the best time to kind of lean into to either scaling that thing that works or or partnering with other good people.
One last question before you share your contact information is over the years, you tell us why you got into real estate and what you're doing beforehand and kind of the route you took, which wasn't the same as what other people, which I think is most entrepreneurs, most people, that when in school, they have people going all this way to getting jobs, getting higher education, and entrepreneurs go kind of a different route. Kind of how has your view or your kind of relationship with money changed over the years from maybe before you started real estate investing to kind of through this journey to where you are now?
Yeah, it's never really been about the money. It's been about the lifestyle and the time. And so I was pursuing strategies that afforded me the time that I wanted desperately with my family. I mean, I missed the first couple years of my son's life because of deployments. We learned we were having twins a couple years later. I'm like, never again, right? And so it was where, and if I was in consulting, and you make a great living, but you're never home. And so I would prioritized, um, set the vision, set the goals, and then like back into like what strategies do I need to be doing to achieve that. So I mean, I think that the cash flow, the financial stability will come, but I don't, if that's I think that the target should be like what kind of life are you trying to build, and the rest will kind of and you're doing all the right things, you're partnering with the right people, you're doing your quality due diligence, not losing money, and I think the rest will come naturally.
Yeah, really developing a life by design. That's what you've done. So that's awesome. So Quinn, how can our listeners learn more about you and your businesses?
Yeah, I'd love to have a conversation with any one of your listeners that have the land stuff has resonated with them. We are looking for accredited investors to invest in the Legacy Land Fund. It's legacylandfund.com, and they can schedule a call with me there.
Yeah, and there's a lot of great information on there. I was reading through that yesterday as preparing for the show. So tons of FAQ, tons of information, everything about their rates and returns, everything like that. So definitely hop on there. I'll put all the notes or all the links into the notes section. And Quinn, thank you so much for coming on today and looking forward to connecting with you here in the near future.
Enjoyed it. Thank you.
Thank you. Hi, guys. It's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars LLC exclusively.